Inside financial markets, when people are first starting off, they are very dependent on price action, the news, and signals. For example, if the markets go red, they all scream sell, and they do exactly that. If the news says good times ahead and the price action is green, they say buy. This is a major problem and the cause of consistent losses. As time goes along, people understand that the structure inside the market is the most important thing that they need to look at. But it doesn't stop there. They also need to look at intercorrelation, interdependence, and the paths, and also to gain a comprehension on how different charts are moving together, aka the cheat sheet. Becoming independent or an institution of one is the whole goal of the CTKS method. You can see one thing inside this particular little comic. These people are very emotional. They're really upset when price goes red and they're really elated when price goes green. These guys over here are a little bit different. They're pretty much the same no matter what price does. This is not by accident. One of the keys to consistent profitability is to realistically not care about any one trade. It's the clump of trades that you move together with that is realistically really important. If you're gauging your own self-esteem on if your account balance is going up or down, you're going to be on an emotional roller coaster from hell until you master your emotions. In this video, we're going to go through some key levels, and I'm going to refer back to this time and time again because I think it's really good to break you out of the concept that emotions cause profitability. In fact, emotions cause losses. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS Method. If you're new, a very warm welcome and welcome back CTKS family. My goal is to assist you to become more of a financial and emotional blessing to yourself and those you love, gaining real wealth and positive excellence in the process. There are definite steps that you can make to move from consistent losses into consistent profits, but it requires that you look at everything differently. One of the most important things, do not let your emotions control your buy and sell decisions. This is the pathway to consistent losses. You need to disconnect emotionally from the markets and put very solid systems in play. One thing to note, when you do your demo accounts, your paper trading, it's an absolute and utter waste of time. Everybody's got the biggest brain on the planet when they don't risk their own money. But when you do live trading, the thing is completely different. As this little cartoon is saying. Therefore, start small with coffee money. Put real money into the markets, but make it a coffee level. Don't worry about getting the Lamborghini, worry about holding on to your capital first and foremost. It takes literally decades and decades to read the market, and because I've been inside financial markets for nearly 4 decades, I'm going to give you my cheat sheet of how I look at the market. One thing to know, there is always market structure underneath any price chart that you're looking at. One thing to bear in mind, and a thing that people just don't understand, all market charts are intercorrelated and interdependent. This means that the movements in Bitcoin are controlled by other charts. And specifically, they're controlled by the structure of those charts. When you understand this, this is an absolute game changer. And also, please bear in mind, when you have market structure gaps like this one, price can be very explosive, not only to the upside, but also to the downside. Understanding the most powerful market structure measure, CTKS structure, is a very good starting point, and I'll share tricks and tips every single day. If you're sick of not winning by financial markets, then please subscribe. We're going to talk about things that are just simply not spoken about on other channels. In the past 24 hours, the crypto market has been coming down. We're going to look at the CTKS levels on Bitcoin and also total crypto market cap. And I'll show you how to read between charts, which is a very important skill. A lot can happen in 24 hours, and when we look at Bitcoin, we can see that Bitcoin did as we anticipated. It came down and is currently 106,037. How does a knowledge of CTKS structure help us understand what's happening inside this price chart? A lot of people, when they first start, they look at a chart and think that price moves are all random. They're completely all over the place. This couldn't be further from the truth. Price is always structurally bound, and when you understand this, and especially when you understand the gaps, for example, positive CTKS gap, explosive upside action, negative CTKS gap, explosive downside action. But it's a little bit more complicated than that. A lot of people would say, well, if the CTKS gap was like this, why didn't it simply just decay all the way down right here? That is because of intercorrelation and interdependence, something that I teach quite extensively in the Profiting course. So let's have a look what's actually occurred inside the crypto market. Bitcoin came up to the 110 mark and just got hit on the head multiple times. Then it lost its structural support around that 108,888 mark. Then what happened was that we had a negative CTKS gap, which meant that the entire crypto market was volatile and prone to sell down and sell off. Of course, there's a lot more to this. If you understand intercorrelation and interdependence, it's really important. Now we're getting down into the structural support levels where we expect price to actually find a footing again. One of the questions you might have is, what happened here? Why didn't it just plummet down? The answer is found inside total crypto market cap. Another question you might have is, why did it get really volatile right here? Also, the answer is found inside total. Let's check it out. Looking inside total crypto market cap, we can see when Bitcoin pushed up, the entire crypto market came up with it as Bitcoin tried to get through its 110 resistance. Total crypto market cap failed to make higher highs. It started to weaken, and then we saw this price action. But this is really difficult to make any head or tail of because we don't have a concept on structure. So when we put the structure on the chart, things start to take a completely different interpretation. We know at this 3.41 trillion, there was a lot of overhead structural resistance. Also, unlike Bitcoin, when it lost its structure, Total had many areas of structure to capture price. You can see this confluence of heavier and heavier structure rebounded price, but it did so within structural levels. And then when we started to come into this negative CTKS gap, the entire crypto market felt it. The algorithm said, we're coming close to a negative CTKS gap. We can sell down hard now. Understanding structural passes and structural failures is really important. Those levels of structure might be a little bit difficult to see, so that's why I've just drawn them in here. Lines above those structural levels from marking up your chart with level 1 and level 2 standard certification. So you can actually see that the reason that Bitcoin didn't fall through the floor was because Total had levels of structure underneath. If Total had a negative CTKS gap, well, that's a completely different thing that coincided with Bitcoin's negative structural gap as well. But it didn't, and that's exactly why we got this momentum. But because Bitcoin was stuck in a negative CTKS gap, it threw negative price momentum across the entire crypto market. Now, if you're like most people and you're invested in, say, XRP or Doge or ADA or whatever it is inside the crypto market, you would probably say, I'm really not interested in Bitcoin and Total. A lot of people would just simply turn to the news sources and say, oh, I'm just going to look through the news. The news knows why things move. The news doesn't know why things move. The news simply reports that they did move and tries to come up with a story to explain it. For example, if we look into XRP, we can see this upward price surge as Bitcoin came up, as Bitcoin and total crypto market cap came into overhead structural resistance. They simply couldn't confirm a support. We started to come down, and we had that typical. What we saw inside total crypto market cap, multiple levels of structural support, and then unfortunately they failed. And the negative CTKS gap was largely responsible for XRP selling down. In other words, there was inherent weakness inside the crypto market. We can see exactly the same thing here again with Solana. Bitcoin and the entire crypto market rallied up, found overhead structural resistance that they simply couldn't get through. And then we had that sell down in accordance with total crypto market cap, and then the negative CTKS gap on total started to play out. It's literally retraced this entire move back to here. Therefore, a lot of people say, I want to know if something is going up or down. The only way to understand a wave-based function when it goes up and down continuously is to just test according to structural failures and structural passes, negative structural attraction and positive structural attraction, intercorrelation and interdependence. If that sounds painful, it couldn't be any less painful than losing a heap of money. Professionals are always stacking probabilities, and they, over time, understand that stories are just meant for children. So if somebody gives you a story about where the crypto market should be going, for example, BlackRock buys X dollars of this and Y dollars of that, and oh my goodness, that's just going to pin you into the wrong side of the trade. Everything is structure. And what about something like ADA, Cardano? We can see that as the entire crypto market moved up, more and more buyers would have been drawn into price. And unfortunately, that trend weakened and then sold down. Why? Because of the negative CTKS gap inside of Bitcoin and the structural failures trying to get over that 110 mark. Therefore, if you were investing in ADA or trading in ADA, you would be very cautious to see what happened inside Bitcoin and total crypto market cap. Therefore, when looking at your money chart, and for example, if you're putting money into ADA, that would be your money chart. You must also look at Bitcoin and also look at total crypto market cap. Don't simply look at ADA and say, I know what ADA is doing. You do not unless you look at Bitcoin and total crypto market cap. This can be an absolute game changer. It literally doesn't matter what crypto chart you look at. The alts always follow Bitcoin and also total crypto market cap. If they weaken, you must be very cautious of exponential sell downs. A lot of people in the stock market use leverage because the stock market moves very, very little. And when you think about crypto, the leverage is already built in. That's why as a community, we go long at spot. If you're liking the video so far, please smash that like button, and if you're new, don't forget to subscribe. We have awesome content that you won't find anywhere else. If you're sick to death of being dependent on the news or different signals that you have to get from other people, just get into structure. It will just change the game for you. And always remember, if you're buying or selling from an emotional level, you're already going in the wrong direction. You simply need to look at structure, stack probabilities, do your intercorrelation and interdependence. Have a look at your paths, check out the cheat sheet to understand it was the VIX that was bouncing all along, and that is the exact thing that brought Bitcoin down. And when you understand structure, it's an absolute game changer. You can apply CTKS structure to any price chart. And we have a ton of free resources at ctksmethod.org. Please check them out. And if you'd like to get an even better understanding about how to master price action, please check out this particular video. You'll find it is so incredibly valuable.